Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for the 12th of November here in 2020. What we're looking at is Gap and earnings in Disney, our entertainment company here, and the Walt Disney Company. They have their theme parks, and of course, they're a large media empire. They have reported earnings. So what we're looking at on the left side of our chart, this is directly after market close here on a Thursday. So you'll know more than I do on Friday morning or in the evening. But I'll talk about a couple things for Disney if you are not already positioned. Number one, it continues an uptrend on the daily chart, which has roughly 140 and 130 per share on the gap up. What is to our right? What's happening? What is to the left? The expected move for the earnings play with our straddles and this TheoTrade indicator. And that is a way to put on butterflies or to play for one of the two expected moves being hit. And that's what happened. So what we're looking at to the right is the after hours boost of the stock. The expected move is roughly 143.13, and you're seeing the stock right at that spot. So the double straddle, 143.13, or to the next month straddle, 144 and 41 cents. So we are right there in that spot. We will be opening up there most likely on Friday morning, and that's where the if you're not positioned comes into play. Given that the weekly expected move, or that the earnings based expected move is right here, and a prior opening gap high also in this level, well, this gives us a spot to trade short against if Disney shares do stay at this 143.50 and 143.44 level right here. That gives a spot to trade short against to play a little bit of a down gap or a sell-off from a successful hit of the earnings-based expected move. Didn't hit the downside, but the upside, if you had butterflies on, that will be your profit zone, your profitable exit. Take the money and run. Good trading onto that upside fly or upside play. And the same thing happened in Cisco, a big technology stock that has been downtrending through the latter part of 2020. And that gap took place really mid-August, and that sent the stock lower from the high. Now, what is the expected move? It is, with our straddle pricing, the earnings-based indicator, roughly 41 and 61 cents per share, or 41.75 per share. That's your upside expected move. We are not going to be playing the downside, but that was about 35.75. To the right, the market's gapped up. Cisco shares have gapped up right into the expected move. So again, if you're hearing this for the first time, we have classes, we have coaching sessions from Don and the team on trading butterflies into weekly or into earnings base. These are different expected moves. These are earnings expected moves. And there's a tool we have at TheoTrade that can help you get these price levels and put trades on, and what to do with the pre-earnings announcement. And now that we're here, again, these butterfly type of trades are going to be profitable in those parameters. But if you are not positioned or do not trade ahead of earnings, then we have these expected move targets to, again, possibly play against, which means on Friday morning, if we do stay at these elevated levels, the gap up levels, that will be your bull bear pivot for intraday traders. Short against it to capture some profits, play some puts down as traders do take profits on a gap up. But if we do see additional bullish action taking us above 42.50 and breaching the expected move, then you might want to abandon any type of short sell strategies for the short term and maybe even play long for a potential trend day to the upside. But those are just strategies for Friday's tape. Where are we in the bigger picture? We'll take these off and look at our charts for today's session. And we'll go back to the regular charts right here. So in the S&P 500, we still continue to flirt with these new all-time highs just above or at 3,600. Today was a trend day to the downside. Today played us bearishly within the volume profile. And I'll highlight these just in the sense that this is a probability distribution curve, not the most perfect or beautiful volume profile we've ever seen. But nevertheless, when the market is overextended here, the odds do favor a pullback or retracement or move lower, call this the dominant thesis, down to the red line, which is the point of control. For the S&P, that's just above 3,500. For the Nasdaq, it's a little bit different. We already had a downside move earlier in the week, and that's on the back of the technology sector and technology stocks, namely, as we talked about Tuesday, the monsters of tech. I highlighted those into a support zone, and they have bounced, and that includes some of our favorite tech stocks, but that's not in this video. That was on Tuesday's video. So for the Nasdaq, our pivot points are about 12 and 60. For the Dow, we do have this point of control here at about 29,250. And those who trade the Russell, all these profiles look similar. The market is coming down from an overbought, overextended type of play. So the downside action is the dominant thesis. Bonds had a bid today as they moved right from above to beneath, and from beneath the yellow back to the top. So in today's session, we did have a play for risk off type of behavior. That means equity came out, in a sense, of the stock market, technology notwithstanding, but the stock market, here's the Russell. Equity money came out of financials, energy and materials, and to an extent utilities, and rotated into some safety names. That includes the bond market. Here is TLT. There is ZN, ZB, the 10 and the 30-year bond and note. The VIX itself, we don't look at the profile for the VIX, but there is your VIX. And money rotated into, short term at least, the gold market. And that again played off the lows there. At the same time, again, equities were weak. So for the rest of this Friday and into next week, and as we push the midpoint of November here, this is where we are in the market, straight up at the high. But statistics and the probabilities and the little profiles and all the things we look at are a little bit favored to the downside short term. We are in this short term little overbought condition, just shy of these new all-time highs. That is true in all indices except for the Nasdaq, which is a little bit off the highs there. And that was on the election news and some Fed news and other things that kept last week very volatile. Whatever your positions are right now, take a look, be careful, and always be safe. This is Corey Rosenblum with tonight's Theo video update for the 12th of November, 2020.